Hey, it's Jeff Wade here at stockideas.org. Today I just want to do a quick book review of When Genius Failed by Roger Lowenstein, which is about the rise and fall of long-term capital management. So, if you're not aware, long-term capital management was a fund started in the 90s by a guy named John Merriweather, and he was sort of a bond arbitrage pro, and then started this firm kind of based on that methodology. And this is the story of how the firm rose to prominence, how it attracted tons of money, how it was sort of the firm to be. It was the hedge fund of all hedge funds. And then, after a couple amazing years of performance, things started to go south. And this book, so chronicles the rise and then fall of LTCM here. Gives great insight into all the characters along the way. The main thing that I think I realized from reading this book is that I really do like Roger Lowenstein. I've read some of his other books. I've reviewed his Buffett biography here. And he's just a really capable author. He does a great job of not only telling an entertaining story, but also really helping you, I guess, elicit the lessons. So he doesn't just give you a great story, but he takes some time as well to kind of educate you as to why certain things are important, what they mean for the financial markets at large, why things are maybe more risky than they're perceived. So throughout the book, and you can see it's only about 250 pages, and it moves quite quickly, but despite the small size of the book, Lowenstein does pack a ton of information into this. And this is the updated edition, I think from 2009 or 2010. So there's just a couple pages at the end addressing the most recent financial crisis, sort of in comparison or relatably to long-term capital management, because there are a lot of similarities and parallels between the derivatives that LTCM used and the derivatives that took down a lot of the banks, these credit default swaps on mortgage-backed securities. So there are some really interesting take-home lessons for investors. And that's the other thing I appreciated about this book, is that as an investor, it helps you. I feel like you always can refine your edge when you have a better understanding of how the system actually works and what actually is happening and working and not working. And When Genius Failed does a good job of showing that, especially at the end of the sort of, I guess in the 90s and 80s, when the efficient market theory was really coming out. Scholes and Fisher won the Nobel Prize for their options formula. Efficient market theory was really efficient market dogma in these days. And When Genius Fails does a good job of highlighting, exactly why, markets aren't necessarily so efficient. That there are human elements that are irrational, that, will do things that, the model might not have predicted. So, in terms of understanding major market approaches and how people are using them to trade and make tons of money, Genius Failed does, I think, shed a lot of light and kind of does some actionable debunking of efficient market theory. So, if you're looking for a good summertime read, this one's quick to get through, but it is a pivotal, iconic story. In the 90s, this was a major crisis, and sort of the first, not Fed sponsored, but Fed catalyzed sort of bailout of a hedge fund by the major Wall Street banks, which maybe set some precedent for what happened in 2008 and 2009. So I highly recommend When Genius Failed by Roger Lowenstein. Again, Lowenstein is just a great author for all things financial. I encourage you to click through on the link below this video to get to stockideas.org. You can read a much more in-depth review of When Genius Failed. And from there you can also click through to Amazon and read the reviews there and check out if this is maybe the right book for you. So thanks very much for watching this review. I encourage you to subscribe. Click to subscribe for more free book reviews, and don't forget to visit stockideas.org. Thanks a lot for watching.